Hello traders, Gary Wagner here. Just about 10:45 in Honolulu, 4:45 in New York. It is Wednesday, 19th day of April, 2017, and this is the Daily Report for Gold and Silver. We do have a strong downside pressure in the precious metals market, specifically gold, trading off almost a full percent, currently at 1281.60. It is traded to a low this morning of 1275.40, and that's after just coming off of these highs recently, and intraday high today is 1292 and change. We did send out a special trade alert this morning to go ahead and raise stops. I will explain why we put our price point where we did and what we are looking at as potential scenarios as we go into the remainder of the week. First, as I said, gold down $12.50, and that, of course, when we look at June futures. Spot gold is at $1279.73, putting it down about $9.62, about a 0.75% decline. Over to silver. Silver also trading lower on the day, off about 0.75%, down 13 cents at 18.14. And then spot prices are trading at 18.13 when we look at cash silver. So traders, as we talked about in the opening commentary and the opening letter, this is really the first day that we have seen gold prices really come under pressure since breaking out and breaking above that former resistance area and 200-day moving average, roughly at around a 1262. If you recall from yesterday's show, I identified what I believed is a variation off a candlestick pattern simply called a tri-star top. And the reason I have to label it a variation is when I identified this candlestick pattern during the evening part of the trading session, this green candle here was still very much a doji-like candle, and because of that really met the criteria of a tri-star. A tri-star is very much like a triangle with two legs pretty much at equal distances, and the center star really capped above the two stars, one preceding it and the one following it. And so we did get that variation. This would technically be a confirmation of that pattern, but what we have to look at is a real potential that we will find support in this area, and this being a blip rather than the beginning of a correction. Now, the rationale for moving our stop as tight as we did is during the evening session, the market had already traded to an intraday low of 75. And really, to best illustrate that point, what I want to do is pull up a very short-term chart. This is just a simple bar chart in 3-minute format. You can see that the lows that were achieved came in really late last night. At that point, it went and traded back to around 82. It was really range bound, came up, traded to these highs that came in at about, 1284, 1285, and then dipped back below to about 79. We trailed our stops up right in this area after the market had moved back up. Our stops are just under current pricing. We're sitting at 81.20, and our stops are either at 78 or 79. And so traders, assuming that what we're looking at is just a small blip and it's not a full-blown correction, that's one thing. However, if in fact we do get any kind of real retracement here, where could we look for prices to go to? And to that end, we are simply looking at a simple fib retracement of this last leg of the rally when the market traded just below 1200, 1194, and came up to these tops at approximately 1287. When we do that, we can see that the first thing we want to look at, that first level, is a 23% retracement, and that comes in at 1274. It also matches to the low that we hit today, and that gives me a small amount of hope that in fact we have found some support at that price point at 1274, and we'll see prices move up from there. However, if the market does continue to trade under pressure, we will probably, in most likelihood, see the market retrace back to this former resistance area at 1262 to 1258. And my belief is that if we do see this market begin to trade lower, this former level of resistance will now become a level of support. In other markets that we look at, of course, one of the mitigating factors in today's decline was a dollar that rebounded after the dramatic decline yesterday. A US dollar still below 100, although, but did trade off about 0.25% on the day. Now, it's the Dow Jones Industrials that continue to trade under pressure, and today we saw another decline. Roughly 0.6%. Dow Jones Industrial Average down now to 20,400. And if you recall, that was the first price point that we were looking at or forecasting equities to go to. S&P also trading lower, but nominally lower, under 0.2% at 2338. And the NASDAQ actually fared pretty well, trading up on the day over 0.2% to close at 5862. But the one market we certainly want to focus on today was a dramatic fall in crude oil prices, losing 3.5% on the day, losing $1.88 per barrel, and now below $51 at $50.53. So traders, in our trending markets portion, I do want to look at two markets very quickly, the dollar and crude oil. First to the dollar. Dollar certainly saw some recovery after a pretty sizable downside move yesterday, in which the dollar gave up almost 0.8% in value. We are up approximately 0.33% today, so we're looking at roughly a third of yesterday's decline coming back. However, we're not really seeing the dollar on a technical basis hit any real level of support. We peg our support level roughly at a 99. Now, it can be a little bit below, as we saw right here, or right on, and this might be an instance where this supportive factor is just a little bit above. However, my sense is over time, over the next month, month and a half, we will see the dollar continue to drift lower and go to lower pricing. My target right now sits just above 98 at 97.78, and that's based upon a 50% retracement of this longer dollar index move. And traders, lastly, a dramatic fall from grace as crude oil prices plummet, down over 3.5%, losing almost $2 per barrel, under $51 at $50.52. When we take a look at this daily chart expressed in candlestick format, we can see the kind of dramatic move we have seen in crude oil. However, traders, we've seen that kind of dramatic move before. Crude oil is one of those markets that when it does swing, we can get violent and volatile price swings. Now, we have a potential support level at $50.24. The low that it hit today was below that, but most noteworthy to me was the fact that it broke hard below its 50-day moving average. We have been calling for lower prices in crude oil. We certainly saw that today. My target remains approximately 47 on the low side, up to maybe 48, 48 and a half. This band right in here on the upside, and also the 200-day moving average falls right in this area. So I think that crude oil will still move lower and potentially find support either at the 200-day moving average, but could trade as low as moving back to $47 per barrel. Traders, as we talked about during the chart session of today's report, our job here is really an insurance policy, meaning if gold is going to trade higher, I want us to be positioned with something in the market so that if a major rally does unfold, we are positioned properly to take advantage of it. At the same time, my primary objective, besides making profit, is to guard the profit that we've already made and to protect our equity, so that I attempt to move a stop up to an area So it will still keep us in the market if the market moves to the upside, but will either limit our loss or, in the case of today's raising of our stops, protect some of the profit that we have made on the trade. Maintain your current position, maintain your current stop level, which we have just raised. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.